Producer prices are falling, or so they'd have you believe. We're going to show you the headlines today. They announced wholesale inflation heated up less than expected last month. We're talking about the PPI, the Producer Price Index. The data suggests we're easing the concerns of inflation. They said PPI shows wholesale inflation increase less than expected, and that's really the key word here is the expectations. The PPI inflation measure slowing as producer prices fall below expectations in December. Well, let's take a look at the PPI. Here it is on a year-over-year basis, rising to a rate of 3.3%. That's the fastest increase in PPI going back to February of 2023. Now, they said again, it fell short of analyst expectations, that this leads us to believe inflation is cooling. This is the fastest rate of return in a couple of years now. Here's core PPI, that excludes food and energy. Those are the more volatile components. Core PPI is rising this month on a year-over-year basis, 3.5%. That's the fastest rate of return since also February of 2023. So regardless of energy prices or food prices, looks like inflation's back, despite falling short of analyst expectations. Now, here's something interesting. We take consumer price index, that's the basket of goods or services, the prices that we pay as a consumer, and we subtract out the producer price index, that's the cost of the raw materials that are used to make these goods. And what do you have in the difference between the two? That's the profit margin. And we can see for the second time consecutively, 2 months in a row, but the first time in quite a long time, CPI minus PPI is below zero. It shows us, put yourself in the shoes of the corporation. They're able to charge less to the consumer, but the producer prices, relatively speaking, are still high. This is squeezing profit margins. Think about the earnings report in the S&P 500. Now, here's PPI greater than CPI. And this is something that occurred for the first time in quite a while. In blue, that's the producer price index. In yellow, consumer price index. Now, it's thought that where producer prices go, consumer prices will follow. Does that mean that this week's CPI report, expected very shortly, that will also rise? Maybe missing analyst expectations, but still marking a rise? That's left to be seen. But why is all this so important? We spoke about this last week. Jobs numbers are good. 10-year bond yields skyrocketing. They still are. But as a result, the stocks went down. Here are the headlines from last Friday. The Dow at one point was then 700 points midday. Stocks are getting clobbered. Why? Because the jobs number was good. We spoke about this last Friday. Jobs number better than expected, taking any hopes of an interest rate cut off the table. Stock market didn't like that at all. So where do we go from here? Last Friday we said inflation is back. Well, today's evidence shows that's the case. Good news means the Federal Reserve won't cut rates. That spooked the stock market, and it's exactly what we saw last Friday. As a result, last Friday, stocks are not happy. Now, of course, we know today, stock market was mixed at best, but that does not mean that this narrative has changed at all. Now, here's the question. Is the Fed watching the analyst expectations that were better, that were higher than where the PPI actually came in? Or are they data dependent? Or are they very simply going to look back, coming up to the next Fed meeting and say, okay, where is PPI? Where is CPI? On a year-over-year basis, it's now touching levels we haven't seen since February 23. What is our move in that case? As a reminder, we also have our Substack, Just the Data newsletter. Several times a week now, we're also posting notes, which are certainly absolutely free for you to view as well. These are rough ideas of concepts that we're working on, and we certainly would, like your opinion as far as new ideas, new projects that we can work on. And we're putting these ideas here. If any of them, seem to spark any kind of interest, or if you have any ideas of your own, please let us know as well. We hope this has been helpful. We look forward to seeing you back soon.